here with yeah. So I've been out for a while, and I found it kind of hard to forecast. I use that word loosely um, with the um, CMFX system that I've been trading. Um, it's a good system, but it's just really hard to forecast with it. And I think there's some underlying factors related to the market that CMFX doesn't quite pick up on. And I wanted to kind of strip it all down and get back to basics: support and resistance and trend lines, and just some real simple stuff. And I think this is going to work out a little better for as far as forecasting. Now, as far as entries and stuff like that, still like the 5 minute time frame. I still like trading CMFX, so I'm probably going to do a bit of that too. But as far as like what I'm looking for this week, I found something that I think, or I came up with something I think is a little easier to settle on. So here we go. What this is, um, I went to the weekly charts and I drew some trend lines, and I put this on the line graph, or on the line graph, and I marked out all the local support and resistance zones on the weekly chart. Then I dropped down and did the same thing on the daily, and um, then I went to the 4 hour and put the candlesticks back on there, and it looks really good. It really does. And basically, what happens? So I've got that, and then this little indicator here, these arrows, is called my entry trigger, and these are the settings. Let's see if I can post the indicator somewhere so you guys can download it. And then this is the color RSI. And I've got it set to very short, a 3 period RSI, set to a typical price, current time frame. Overbought is 90, oversold is 10. And so that's kind of where this is. So basically, whenever it reaches up into um, overbought territory, this will turn red. And then I look for a resistance level to trigger an entry, and I got that right here. Um, I'm a tad late, um, but the price is floating right around the entry. And what I want to do is, instead of trying to take these big swings in the market, sometimes it has that to give. Okay, and that's where the space is, and it can really move. Other times, you know what? Like, it's gonna go to the opposite level, and it's not gonna be a huge move. I mean, that's from level to level, that's almost 80 pips. I mean, that's a nice trade. Why should I be unhappy with that? So right now it's about halfway between levels. So if I short it on the open of the market, I'll end up with about 43 pips. That's what I'm looking for. I want it to drop down to here and see the RSI become oversold, and then start moving back up. And once I get a signal from my entry trigger to go long again, I'm going to take it back up to the opposite level. And what can happen is the market can fall through this level and then come down here to this next one at where'd it go? Come on, looks like 127.95, 127.96, something like that. And if it touches this level and we're oversold, and we start to move back up, we'll get an entry trigger off of this. And what I'll do is I'll take it back up here, and that's a 97 pip gap, or a 97 pip range. And that's really what I want to move towards, is range trading. I guess that's support and resistance trading, range trading. Taking it from one level to the next. You can see back over here, if we back up, price became oversold here and started to move up, and I got my entry trigger right off of that line, and I could have taken it right up here for 60 pips. The market found a lot of support here and ended up moving up for, good grief, 400 some odd pips. So catching any of that move would have been fantastic. That would have been awesome to see an entry go from here to here, which we would have gotten pretty quickly on this spike. But that's still 60 pips of profit in my pocket, and I kind of like that. You know, I mean, I can appreciate that. And then, you know, it came back up here, and we're oversold, or overbought rather. Market started to move down. We got an entry trigger. This was the weekend gap, so this may not have, I would have had to get in right at the tail end of here, or take an entry as a spike back up to fill the gap. Even so, I mean, right here from that level to that's almost 40 pips. I mean, that's decent. Could have taken it down to here for almost 50 pips, or even this next line for how many? About 69, 70 pips. So we've got choices. We've got options. We've got choices. We can use some discretion. We've got a little bit more wiggle room to figure things out. See where the market's going to stall. In this particular case, I wouldn't have taken a trade right here. I would not have taken a buy trade because the market was not oversold. It wasn't down below the 10 range. So I want to stay away from that. And then I got another. It went into overbought here. Gave me a short here, so I take it down to this next level here for 50 pips, and it easily went down that far and shot back up. And so, you know, another one right here, I would not have taken this one. This was a weekend gap. It stopped here and then dropped here, never filled, and just kept right on going. I would have had to get in right here in the open of the market, and that would have been okay, I guess. Would have been for about 47 pips. What I would have done was I would have taken this next one, and I'll tell you why. Excuse me. Right here we've got divergence. We've got two highs there. Got two highs there, and two highs here. So here's the first one. Here's the second one. And we have a higher high here and a lower high here. That's divergence, and it was at a major level, at the very top of this move. And you know, I wouldn't have known that at the time. You can never tell when it's the top of the move or the bottom of the move or the middle of the move. It is what it is, and that's kind of how it is. But this divergence would have had me interested because this weekend gap shot back up here and then stopped. And I would have taken it right down to here, which is where we went for 70 pips. And, you know, of course, it fell through. This would have been a very tempting trade to take, and I'll tell you why. It stalled here right in the middle of support, or between support and resistance levels. Came back up, did the same thing, and then dropped. And kind of had a bit of a fake out candle here where it looked like it was going up, but then it came down. That is a candle pattern. I won't tell you where I got that from, but that is a candle pattern. And this was very close to, this was at what, 82, and our overbought level is at 90. I would have probably jumped on that one and taken it down to here for 97 pips. And that's like 97 pips. That's a nice trade. That really is a nice trade. Like I said, we can see where we have some discretion that we can use. It's not, you know, these levels aren't set in stone. You want to judge overbought and oversold levels with a good indicator. So anyway, back to where we're at. I'm going show you what I'm looking for. Okay, so I want it to come down here to this level. Whoops. And then I want it to bounce. I want the RSI to come down, be oversold, and then come up. Now, at this level up here, maybe it'll be overbought, maybe it won't be. If it isn't, and somewhere right around in here, then we'll look at the next level, or even the next level above that, for our overbought area, and then we can sell again. So I kind of like this idea. I like this. I'm more comfortable with this than I am with CMFX for saying, hey, I'd like to see this. This is a little better, in my opinion, because we can see some market action in here. We can see divergence. We can see support and resistance levels, trend lines, sort of basic market mechanic stuff. So anyway, that's what I'm looking at. I'd like to see it move down. If it breaks this level here, I'd like to see it come down here and give us a buy trade. Bounce off of this level here. Maybe we'll collect most of that 97 pips there. That'd be an awesome trade. Yeah. So anyway, thanks for watching. Don't forget to subscribe. Tell me what you think, and I'll see you in another video.